What's going on, Facebook? Perfect timing, Anthony. I love it. All right. Welcome to the Build and Grow with Real Estate show. My name is Josh Weidman. Judah Hoover is out today playing golf. I mean, what a life, right? But today we've got special guest here, Anthony. I'm going to butcher your last name. Lynham?
No, you got it. It's a great job, man.
I love it. Yeah, Anthony Lynham with CR Property Group, Integrity First Home Buyers. Dude, I've been waiting to meet you for a long time. Like, I don't know how to cross paths, but I've been super impressed with what you guys do. It is it's really impressive. So Anthony is you're the operations manager, operations manager. Right?
Yeah, Director of Operations or COO here at Integrity First Property Group. We've changed the name from CR to Integrity First Property Group.
Okay.
Just to line up with our other Integrity First brands. So Integrity First Home Buyers, Integrity First Property Group lines up a little bit better.
Sure.
So yeah, I'm the Director of Operations here. We've had a lot of growth in the last year. We've gone just in 12 months, gone from 25 employees to roughly 45 now. So,
jeez,
I think that's what you were referencing.
Well, no, not just that, actually. I mean, I've been impressed with your operation just in general at the way you guys have. You've had a lot of consistency, and I follow a lot of what Eric does. Eric puts out a lot of videos and content. You do as well. I see you out there, and I'm just impressed by not just wanting to be bigger and growing, but actually be better. I like
right.
I have an 11-year-old son, right? And we play, he's playing baseball right now, oddly in the fall, there's no spring baseball, so it's pushed to the fall. And we were talking about hitting, and like, how do you hit a baseball? And it's like, everybody wants to hit it over the fence. But if you focus on like hitting it well, it's amazing how far that ball will go and how frequently you hit it. And, and then some of them go over the fence, but I'm trying to make the analogy though, that you guys seem to be trying to do business well for everybody involved, your clients, your employees, and all across the board. I love that.
Yeah, for sure. I think it comes down to focus, really. When you're a smaller company, you have people doing a lot of different things.
Yeah.
And of course, as you grow, it gives you the ability to have people be more specialized and stay in their lane, so to speak.
Yeah.
But to your point, overall, as a company, we've just put focus on being disciplined and being consistent, like you said.
Yeah.
Not just with lead generation and marketing, or not just with sales, but the customer's experience, right? So getting more consistent with that required us to get their feedback and then listen to that feedback and act on it, right? We could get the feedback and say, oh, that lady she was crazy.
Right.
But no, you have to be humble enough to take the feedback and act on it. Go ahead.
There are crazy people.
There are, but we still have a responsibility to make sure that they have a good experience.
Absolutely. So we're talking about where you are now, but let's kind of back up a little bit. Can you start by just kind of talking about what you how you got into real estate investing, how you ended up at Integrity First, and we can just kind of start there and we'll see where it takes us.
Sure. So we'll make this a little more personal. I first got into real estate when I was 21. I bought my first 2-unit. I had a job out of college as a roof truss engineer, which I did for 6 years, and that was fun. I loved it. But my brother and I got into real estate investing at a very young age. Actually, my sister did as well. And, we all read Rich Dad, Poor Dad at the same time. And then every single Christmas and Thanksgiving dinner became real estate talk, and it's kind of the rest is, I'd say, history. But that was 21 years ago. And started flipping houses right after I bought that 2-unit. So I did that for a little while by myself, and my brother and I incorporated, left our full-time engineering jobs, and just started flipping houses. And we were doing 2 to 3 a month. That was in 2004, 2005. And then, of course, we had that big bubble. So back then was a little bit like it is now, where you had very low supply, very high demand. Prices were going through the roof because of that. But back then it was built on this, fake financial bubble. I think it's a little more sustainable now. So we moved into wholesaling and lending at that time because it was tough to compete in 2005, 2006 and buy houses at a discount, rehab them. So we would buy them, then just wholesale them. And then 2008, like a lot of people, it just, quite frankly, all came crashing down. I mean, it is what it is.
Yep.
And at that time, my brother and I, Sean and I, were really good at lead generation. But we didn't have the hard money fund anymore to back it up. We didn't have the people that were buying our wholesales went away because they couldn't get hard money. So we just took our skills and we took it to the retail real estate world and opened a team at Keller Williams.
Okay.
We did that for quite some time from 2008 to 2012. Built up a good team there at Keller Williams, did great. And then it was my brother and my sister-in-law and myself, and my sister-in-law decided to stay home because they were going to have a baby. So she was really our director of operations, the glue that held everything together. And we just said, maybe it's time that we sort of take a step back. And so my brother went and did marketing consulting, and I went and built a little short sale business and did that for some time. And then I opened Select Realty Services in 2013, which was my own retail real estate brokerage. Did that up until 2019. So we only had 12 agents. We were a small boutique brokerage. It was great though, great culture, great people, and learned a lot just starting from scratch. And then, life happened, and I met Eric Brewer here, and I was just like, man, this has the potential to be something amazing. And they were already amazing. But knew with Eric's leadership and the talent that they had here, I thought, man, this is a once in a lifetime opportunity. This is amazing. So I think I could add a lot of value to these folks, and I think we could do something really special together. So I decided to come here, and initially came as a director of acquisitions and sales, and then just, got the promotion to COO about 2 years ago. So I've been doing this role for 2 years. It's been amazing, man. We just had just amazing people, amazing talent. Anywhere we go, like whether it be a national mastermind, and people say, wow, you guys have had, success. The reality is that that's just our people. We have successful people that work here. We have people who are hungry, they're humble, they're smart, like they want to come and make a difference. And we follow Eric's vision, and our vision is to have the greatest impact that we can by continuing to improve ourselves and our community. So we do, if you see us out there, it's because we're in the community. Right. Right. If you see Eric's Facebook Lives or my Facebook Lives or any of the videos that we post, like it's about getting the community to be better or giving them the knowledge and information they need to grow as well. Rarely is it about us and what we're doing. It's about what we can give back. So I just truly enjoy that and value that, and that's what we're here for.
Yeah, that's. I'm going to mute you for a second. I'm getting reverb when I talk. So, one thing that really struck me when we, as you're telling your story, is that it seems like, you can kind of see this now. When the risk is the highest, when the deals are, I don't want to say the worst, but it's hardest to find the deals. You've got the most amount of money that wants to be in that spot. You've got the most amount of people that want to be in that spot. They want to be investing. But then when there's a pullback, and there's an adjustment, and that same house that last year you were paying $300,000 for, and now you can get it at 150 or 175. There's just nobody there to buy it, and there's no money to fund it. And I think that's kind of an interesting dynamic, just in general, as the as the markets go. It's kind of odd how that works out. You were mentioning like your hard money experience, and and that market shifted. What do you see as we've talked on this show a couple times just about like market cycles and like where we are in time and like what we see going forward. What do you see as far as comparisons to maybe like that 2007, 2008 timeframe? And what are some of the differences that you've noticed?
Great question. Boy, I wish I would have prepared for this. I'm good. I'll give you off the cuff what I think are the similarities and differences, because it's a question that I often ask on our Facebook Lives as well. My opinion is that I think we're in a much more stable market. I think what you're seeing is, there's going to be this sort of pitfall, right? We're all just going to be going along, and then there's just going to be a bottom that drops out. Now, the good news is that in a more stable market, because financing and lending should still be stable on the front end of things, right? Meaning the difference between 2008 and now is you had a financial crash, which is still possible, right? Because you're going to have a lot of bad debt out there. But what you had before was bad borrowers, people that weren't qualified. It was built on a weak foundation.
Yep.
So now that we've strengthened those rules and those qualifications, and we're not doing a lot of that lending anymore, I think it's a more solid qualification process. Nonetheless, the bottom is still going to drop out at some point. We just hope that it's not as quick and drastic as it was last time. Mm-hmm. I think what you'll see is you're going to see lenders sort of hold on to that inventory. And I hate to compare it to the Corona curve, but what you can see, or hopefully see, is that when they're going to try not to foreclose, right? And then they'll hold on to some of that bad debt for a little bit longer so that you don't have such a steep drop. Now, one way or another, so that's, I think, is the difference. The difference is we're more financially stable because it's built on a better foundation.
Yeah.
Right? Now, the similarity is you're going to have the bottom drop out at some point, and you're going to have a glut of foreclosure inventory, which will pull down the values, right? You'll also have now a lot of inventory that becomes available, whereas right now we're in a market where at this particular moment, there's hardly any. Right. And what happens then? All this inventory comes into the market, days on market go up. You don't all of a sudden have a rush of buyers coming in, right? To make up for that increased inventory. So prices start to come down a little bit again. And, now your comps are running based upon the foreclosure down the street and things like that. So that's the similarity. The bottom drops out, values come down a little bit, and then there's a glut of inventory back on the market. And that was 2010 and 2011, if you remember. It wasn't 2008. It took 2 years for that to catch up. So I think that's what's going to happen, but it'll be 2 years from now. It won't be as soon as the ban lifts. It'll be 2 years from now before those things start to unwind. That's the similarity.
Well, and I think that what we also have going on here is that we're going to have, like you said, the banks are not going anywhere. This is market cycles. They go up and down. Prices go up and down over time. It just happens. The difference that we have right now with the some of the economic problems that are on the table right now, and some of the other issues that are out there, they're fabricated. They're not like real life things that happened. There's a pandemic that shut everything down. You have all these businesses that are going out of business, or you got this high unemployment as a result of this government intervention. And I think that the government has reacted by keeping interest rates low and indicating that that's going to continue on for the foreseeable future. And it's not just going to be 12 months, 18 months. We're looking at probably 2, 3, 4 years of really, really high, really, really low interest rates.
Right.
So that's the difference. What do you see as the similarities?
So again, I think the similarity is you have the market drop out, like, or just means that when I say the bottom falls out, it just means that the available inventory that is out there, well, really the bottom's falling out for the lenders themselves.
Right.
And they're going to introduce all of this inventory back onto the market, right? Just like from 2008 to 2010. The other similarity that we see is there's a lot of unemployment. Are those people all going to get back to work? And if you remember back in 2008, there was a ton of unemployment. Barack Obama put those, extended unemployment plans in place. That's another big similarity, right?
Yep.
So, and that was another challenge back then when that inventory, the increase in inventory came onto the market. You had unemployed people that were not able to pick that inventory back up, right? Yeah. So again, another similarity with what we have going on now, or possible similarity, is are the people that are unemployed, are they going to be able to get back to work, get good jobs, and then be able to pick this market back up when all of the increased supply comes onto the market?
Well, and I think it's really odd what the business culture looks like, and I don't know, the business environment looks like right now. Right. I just got a notification yesterday that my gym is closing. Like, it's closing in the middle of October, and its location, it's like it's set up for a gym, and to change it from not a gym to something else is going to cost an exorbitant amount of money. Mm-hmm. And right now, like with all of the restrictions on business, the outlook for filling that vacancy isn't great.
Right.
At some point, it's going to make financial sense. Like we talk weekly about, some of the layoffs and the employment numbers and things like that. At some point, there's not going to be any restaurants around, and somebody's going to say, you know what, I can make a pizza, and there's nowhere else to go, so I'm going to open a pizza shop. You know what I mean? Like, I'm going to open a gym in this location, and all of those places are going to fill up. There's going to be more stuff happening in that market that I think are going to be, the void is not going to last all that long. And I think, we're going to see a lot more recovery once we get past this, this daily updates of the number of infections and all the other mess that's kind of going on right now in the market.
Yeah, so to go along with what you said, I'll give you just a boots on the ground view. We have 6 positions we're hiring for right now, 6. It's hard to find people who are, ready, willing, and able to work, or just qualified for that matter. So the point there, at least from where we sit right now, and I have 2 interviews this afternoon, is there's not a lot of people out there looking for jobs right now.
Right.
And I would venture to guess, I believe all people have good intentions. I don't think they're just sitting at home on their laurels. I think that there's not as many people unemployed as they're, making it out to be, or there may not even be as many people behind on mortgage payments as, that we're seeing reported. So that it may not be as bad as we think that it is. And so to answer my own question from before, are people going to be able to get back to work? Yeah, they are. And to your point, that gym's going to open back up. It might not be the same owner, but it's going to be a different investor who, opens it. There's going to be, what do they say? They say that wealth never goes away, it just transfers, right? So nobody lost a ton of money in this thing. It just got shifted around from people who were, over leveraged to, now what's going to happen is that person, unfortunately, is, maybe has to close. But then the guy who, owned 2 other gyms and wasn't over leveraged can now move into that space and take advantage of the opportunity. It's sad, but it's a reality. So, wealth doesn't go away. It just transfers. And I think you nailed it, Josh. I think you nailed it that, hey, we're not going to be in this. We may not be in this, terrible place. We may just be in a place where opportunists come in and take advantage of the opportunity, and people who maybe just, weren't as safe in running their business might have to fail or fold, or maybe they even get the opportunity to come back with some of these, government stimuluses that may have helped them stay open. Hopefully that's the case.
Well, and it's this situation that we're in economically, it doesn't look nearly as scary as it did in 2008 because we just went through it, a decade ago. You know what I mean? Like all the stress and craziness, like once in a lifetime baloney. It's like once in a decade at this point. So,
Yeah.
Hey, we've been through this before. Yeah, it's going to be rocky for the next couple of years, but there's going to be huge opportunity on the other side. So, I mean, it's really an interesting dynamic because you look at the national stories, they're really scary, but I also kind of feel the same way when I watch the news and talking about COVID. Like, I know a handful of people that got this virus. I don't know anybody that spent time in the hospital because of it, and like, thank God, right? But
right.
It's one of those things that I think that there's a lot of scary news out there. But locally, I feel like Central PA is in a really good position. We've got a lot of strong small communities. We've got a lot of blue collar jobs that are available through really excellent employers that have been around for a long time that really create a great base in this area. So we're getting a lot of comments here about specifically like, what do you do moving forward? How are you positioning yourself? And how are you finding deals in this market where, you look around and a house hits the market and it's like, okay, and it sells for, 25% above asking price in 2 days. It's like, oh, average condition is now the Taj Mahal, and people are emptying their bank accounts to buy it.
So you'd be surprised, and we were at a national mastermind last week, and I got asked this same question several times. Are you seeing leads go down? Are you seeing the motivation of the seller going down? Are they going to the market to sell on the MLS versus coming to you for a cash offer? So far, the answer is no.
Yeah.
I believe that the reason for that is because our cash offers, our marketing is based upon our services. It's not really based upon when people come to us and they sell their house to us for cash. It's not because of it. Granted, the cash itself provides security, but they come to us for the certainty and the services. So we have a number of services, such as a leave behind program where they don't have to clean out the house, right? We have them choose their settlement date. So they can choose their closing date 3 months out. We'll still buy the house for cash today. Now the next 3 months, they have complete certainty that it's already done and taken care of. So it's those services that we market that I believe people come to us and end up selling their house for cash anyway. So if you think about it, the certainty that provides, that the cash offer provides, like that hasn't changed for people, right? If anything, that's actually increased in value with an uncertain environment, such as COVID. So have some of them noticed that they can go on the market and sell for more and that demand is higher? Yeah, but I don't really think that that's why people come to us to begin with. So I believe that's why we haven't really seen a change in sellers' motivations. And we're honestly buying stuff off the MLS at 60 to 70% of what it's listed at.
Yeah.
And that's just because of the seller's motivation or what they see as value in a cash offer. They oftentimes, they're not looking at when a seller decides to sell for cash, they're not looking to get top dollar, bottom line. So it hasn't really impacted us that much. Go ahead.
Well, no, to that point, if you're not selling on price or you're not buying on price or necessarily the cash offer, right?
Right.
What is the service that they are buying into when they sell you their property? And because I think this is a really good takeaway. What is that service that they're saying, you know what, this thing is more valuable to me than maybe the equity I have in my house or the time that it's going to take to sell or whatever else. What is that thing that you're pitching or selling or providing?
Certainty.
Okay. Will you expand on that a little bit?
Absolutely. So each one of those things I just told you about plays into certainty, right?
Yeah.
So even if it's something as simple as them cleaning out the mom's house,
yeah,
right? if they have to clean it out, they're not sure what to clean out, what they're supposed to leave behind. Now, this sounds silly, but then if they have to go through the things, and what do they have to, give to the brother or the sister, or even just, they don't know how, is it going to cost me $5,000 to clean this house out? It's full of stuff, right? Or is it going to cost me they don't know. The Leave Behind program provides certainty. What does the choose your own closing date do? It provides certainty. What does coming to Integrity First home buyers do that you may not get from the other guy that sent the postcard? Certainty. It's because they see the size, the scale, the number of transactions. You can just, go on our website and see the number of properties that we have in inventory. Certainty. When they work with one of our acquisition agents, and our acquisition agent goes in focused on building the relationship of trust with that seller, that provides the seller certainty. A lot of investors go in, they run their numbers and their formula, they explain to the seller, this is what I can pay for your house because, this is what the numbers told me. And the seller, if they don't build that trust or don't have that trust with the person who's making them that offer, there's less certainty involved in that. It all comes back to certainty. That's the one single bullseye.
I love that. I love that. That's great. I'm going to steal that. Perfect. All right. So what are you working on right now? Like what's your core objective for the next month? Or I don't know what you do with your KPIs or with your personal goals, but what's your focus right now? Where's most of your time going and energy and mental energy, if nothing else?
Getting healthy. So we've gone through 2, if not 3 phases where we've scaled and grown, hired new leaders. I should say added leaders. We didn't, lose any of the old ones. We just added more. We've added a substantial number of people, systems, processes. Everything has been, sort of impacted by scaling up. And we're at the point where we really, really are just going to get dialed in and focused on getting healthy so that we know that each one of our employees are in the best position possible. They're in a position that they love what they do and that they're not, while efficiency is maxing out every system, process, and personnel that we can, we don't want anybody overmax. And, in a fast-paced growing environment, such as ours, we run that risk, and we've probably crossed that threshold a few times where we're exceeding or asking more than we should expect. And it's just us being humble. Like, we want our people to be healthy and happy. So the next quarter, we're dialing back and dialing in on getting everybody healthy and hiring them. And that's why we have 6 positions being advertised. We need 6 people. And that's so that the other people that are currently doing those jobs get the relief and the support that they need. It's about getting healthy. That's where we're going.
That's awesome.
Yep.
I love it. So if somebody wants to work with, tell me what, I know that you guys, you contract houses. What do you do with those once they're under contract? I know you buy some of them, but do you buy them all?
We do. We have a very, very low release rate, very low. And that's because we have so many different exit strategies or pillars, as I call them. You had actually asked a question earlier, and I was going to answer that with, what are we doing within the company to get better or stronger? Forget the specific question, but really what we're doing to survive any kind of market that comes at us is to create these pillars within the company that would survive any type of financial environment. Yeah. So, you asked, what do we do? Do we buy all of the things that we put under contract? Yeah, just about. If it doesn't make a good wholesale, then we look to make it a turnkey fix and flip where we buy it, rent it out, and then sell it to an investor with property management. If it doesn't fit that model, we'll buy it and keep it as a rental. We'll do a light rent ready. We rarely release things because we have a place for anything that we put under contract. And frankly, our acquisitions team is just they're that dialed in and good at what they do that they buy at the right numbers, and we rarely have to release. I think that goes back to what I was describing about certainty in relationships. When our acquisition agent builds a relationship with that seller and we've provided that certainty, we're at a number that we're certain that we can perform what we said we would do.
Yeah, that's great. That's great. If somebody wants to work with you, either buy wholesale properties from you or are looking for a turnkey investment, how would they reach out to you?
Yeah, so we haven't changed the website address just yet. We're still working on our WordPress site. So the price where we have our wholesales listed would be crpropertygroup.com/wholesale.
Okay.
Or you can just go to the website, crpropertygroup.com, search the listings there. The listings that are on that site are what our MLS prices are. Wholesale is a different pricing structure, typically because agents aren't involved and they're all cash deals. So just know that. Yeah. You could always reach out to us at the office here. You have the number there on the screen, 717-800-2603. Or you could always just give me a call. I'd be happy to pass your information along. My cell phone, 717-926-3143, or shoot me a text message with whatever you're looking for, and I can point you in the right direction.
And whether you're looking at buying if you're looking at buying a wholesale deal from Integrity First, don't forget to call Harmony Bankers to help you finance it. We do a great job with that. But yeah, I mean, Anthony, I know you got a hard break here, and I already took you over longer than you said you were going to be here, but I really appreciate it. Always a pleasure to interact with you guys. I wish you the best of luck, and if there's anything we can do to help, please let us know. And yeah, great job, great stuff. Thanks a lot
for talking to you, Josh. Yep, let's do it again sometime. Thank you.
See you guys.